Assalamualaikum to our lecturer Puan Nur Hayati. I'm Umarul with my friend Fad, Amirul and Aiman. In this video, we would like to present our group assignment, that is ratio analysis. The company that we have choose is Hapseng Industries Berhad. Hapseng Industries Berhad is one of the oldest biscuits company that are established in 1958. So without wasting our time, we will move to the first thing, that is SWOT analysis. SWOT analysis consists with 4 components, that is strength, weakness, opportunity and threats. Next we move to the strengths of this company. First, they already have a strong customer base. This is referred to the group that repeatedly buy their products. Next is they also have produced many type of product line under their brand, so they can target more large group people rather than focus on one targeted market. So finally, under the strength is they also ensure their safety and their quality of their product by using a good raw material. We move next to their opportunities. This company already have a diversification in their product, because they produce many type of products such as cookies and biscuit, so they can generate more profit because they sell more products. Next is they are using advanced technology in order to make sure they can meet their demand and improve their productivity. Next, we move to the bad side of this company. First is their weakness. The weakness of this company is they are too focused in their newest product until they abandon their existing product. And one more is the company is selling their product is higher than their competitors, so people tend to buy a cheaper product from their competitors. Next, we move to the threat of this company. First is the tough competitions. This is because the industry is have a high demand and it is also easy to enter the market. The second one, the increasing of the cost of raw material. Day by day, the price of raw material will increase as they have the high demand.
As we can see for the current ratio, we can conclude that for the year 2070 is the best for the Hapseng. We can see that this company have enough asset that easy to convert into cash, so that they can pay their short-term obligation. Even though their current ratio keep decreasing every year, it stay healthy. This is because it navigate that they capture their opportunities, such as expanding their business. And second is about quick ratio. The quick ratio, as we can see to the graph, the year for 2070 is the best for the Hapseng. We can see that it happened because of the decrease of current asset. This ratio show that this company can pay their short-term obligation without relying on their inventory. This is also indicate that they can efficiently collect their account receivable on time and increase their current asset, so they can have enough amount to pay the short-term obligation. As we can see from the graph, we can conclude that the year for 2070 is the best net working capital for Hapseng industry. It is because within these 3 years, the net working capital is decreased, because it shows that the company has attainable capital to expand rapidly without taking any new additional debt.
Today I will talk about profitability ratio of Hapseng Berhad. For operating profit margin, we can conclude that for year 2017 is the best for Hapseng Berhad in terms of comparing to 2018 and 2019, which is 0.90 and 0.18 respectively. Okay, second, for net profit margin. From the result, we can conclude that 2017 is the best for Hapseng Berhad in terms of net profit margin, which is 0.5 compared to 0.14 and 0.13 in 2018 and 2019. For the third one, which is return on equity. Return on equity for Hapseng Berhad, we can conclude that every year as the equal value, which is 0.37. It shows the good result of the housing berhad. For the fourth part, which is return on asset for housing berhad, we can conclude that 2019 is the worst for the company in terms of return on asset, which is 0.7 compared to 2017-2018. For the last part, which is cost profit margin. Cost profit margin for the housing company in 2017 is the best, which is 0.38 compared to 2018 and 2019, which is 0.35 and 0.34 respectively.
Next, I will continue with activity ratio. There are several ratios under activity ratio. First, inventory turnover. The inventory turnover calculated to show how efficient the company managed the inventory. Inventory turnover showing increasing pattern from year to year. It shows that the company does not attempt to overspend by purchasing too much inventory and waste resources by storing non-sellable inventory. In other words, the company effectively sells the inventory they buys. Next, we talk about total asset turnover. Total asset turnover calculated to show effectiveness in using fixed asset to generate sale. Total asset turnover showing increasing pattern from year to year. It shows that Hapseng industry berhad using its asset more efficient to generate sales. Thirdly, we talk about account receivable turnover. Account receivable turnover calculated to show how often a company can convert its receivable into a cash over time. Account receivable turnover showing increasing pattern from year 2017 until 2018. And year 2019 pattern shows decreasing. It shows that the company more likely often convert its receivable into cash over time from year 2017 until 2018 compared to year 2019. Last but not least, fixed asset turnover. Fixed asset turnover calculated to show how efficient the company measuring revenue with fixed asset to return on investment in assets, facilities and services. Fixed asset turnover showing increasing pattern from year 2017 until 2018, but in 2019, the pattern show decreasing. It shows that the company more likely efficient during year 2017 until 2018, and in year 2019, the company is not using its asset to their fullest extent.
Next, I want to present about the leverage ratio of hardset industry. In leverage ratio, that has two, which is debt ratio on equity and debt ratio on asset. From the result of debt ratio on equity, we can conclude that for 2017 is the best for hardset industry in terms of debt ratio on equity. This may be due to be inconsistent increase in the total liability. This show that creditor provide less than the owner in 2017 and 2018, while in 2019 the creditor provide more compared the owner, and the creditor for position is less risky. If the value of the asset decline, it will be a risk to the money of both shareholder on the lender. And second, the debt ratio on asset. From the result, we can conclude that for year 2017 is also the best for hardset industry in terms of this debt ratio on equity asset, which is 32% compared to 35 and 33 for 2019 and 2018. This may be due to inconsistent increase in the total liability. This indicate that some their fund to finance its investment come from the debt, and the balance represent the owner capital or equity. Their debt ratio less than 100% indicate that the company has more asset than debt.
Okay, next I will continue with the market ratio. There are several things under market ratio. The first thing is earning per share. Earning per share is the representation of how much we gain if we sell 1 unit of share. For this company, their EPS is keep decreasing from year 2017 to 2019. So they can improve their EPS by earn more profit, or they can also expand their margin by lowering their costs. Next is price earning ratio. Price earning ratio shows the price of the stock relative to its earning. It shows the same trend as EPS, which is decreasing from year to year. This is because price earning ratio is influenced by the earning per share. So if the earning per share decrease year by year, it will also affect the price earning ratio. As for dividend per share, they are constant from year 2017 to year 2019. This ratio indicate how much dividend gain from one unit of share. The higher amount of the dividend share of the company, the more income will the shareholder will get. To increase their DPS, the company need to increase their net profit so they can afford to pay higher dividends for its shareholders. Dividend payout ratio are increasing every year. This indicate the portion of the earning after tax that is paid out as dividend increasing every year. This also shows that the company have enough sustainability to pay its dividend for its shareholders. Next, retention ratio. As we can see from the chart that this ratio is decreasing from year 2017 to 2019. This ratio is opposite to DPR. Retention ratio indicate the portion of earning after tax that are kept back as retained earning. The decreasing of the ratio show that the company are inefficient in retain their earning that the company should retain. For dividend yield, it show how much the company pay out its dividend each year relatively to its stock price. From the chart, we can see that the highest dividend they are paid is on 2019. It is happened because the decreasing of the market price of the stock. Book value per share represent the minimum value of company's equity and measure the book value of the firm on a per share basis. This ratio is keep decreasing from year to year due to the decreasing on the total equity. Company use the price to book ratio to compare firm's market capitalization to its book value. Hang Seng show decreasing value of price to book ratio. This indicate the company become better and better. The lower a company's price to book ratio is, the better a value it generally is. The last one is equity multiplier. The equity multiplier is a risk indicator that measures the portion of the company asset that is financed by stockholder equity rather than by debts. This shows the Hang Seng equity multiplier increasing years by years. It indicates the company using more amount of debt to finance its asset each year.
Lastly, companies should take more attention to the efficiency of management level. Managers for both companies have many day-to-day responsibility and not enough day hours in a day. Trying to accomplish their myriad of tasks can be difficult. However, using a quality system present many solutions for improving difficulty and saving time. Planning for the meeting involve waiting for IT department to report. It will take days to wait on the updates and document will definitely out of date. Relevant report can be additional delay. It will find a few times before the manager has the desk. Everybody can produce report in matter of click and at any time. Only draw the corresponding detail for your department or client and you are ready without pause. The outcome are simple, reliable and effective communication with a strong framework that facilitates report sharing and cooperation with others within the app increase the performance and show fewer hours for everyday activities, everything problem and increasing overall productivity.